How are you doing? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world options training academy. And we're going to go into our weekend stock market talk for 12/18/2021. I think we got maybe 2 or 3 more of these left before the year is out. We got this weekend. Next weekend, we may not do one. We may do one because of holiday year. So we'll probably do one because I think the holiday's on Saturday. So we'll probably do one for the last week of December. And then that'll be so I think we only got 2 more left for the year. So it's been really interesting doing these all year because we pretty much started this at the top of the year last year. And this is a really good suggestion by, I think, Miss Joy, who told me because I was doing this Saturday and the Monday. And she was like, you probably want to consider getting rid of the Monday because there's a lot of redundancy. And she was right. It was redundancy to do the Monday show and the weekend show. So we just focused on the weekend show. And I think there's a lot of value in the weekend show that a lot of people are not getting. Because they're not watching the weekend show because they're really not into the markets like that. They're more into like the social commentary content. And that's cool because something that I learned is that difference between trending top content and evergreen content. So a lot of the market-based content is going to be evergreen content. A lot of the social commentary content is going to be trending content, kind of based on how you receive it. And it's always interesting what piece people receive because people will comment on something that to me doesn't have anything a lot of times to do with the tone of the actual broadcast. But it's easy. That's what caught their attention. It's interesting. That's what caught their attention. So what we're going to really quickly go into is what do we think has happened over the past week? What do we think the week is going? We're going into the Christmas holiday. So this is going to be a really shorter week. And I will look for less volume this week than normal, right? Because most traders have gone, they're on vacation, just to be real with you. And a lot of them are going to stay on vacation to the top of the year, just to be real with you. A lot of people save their vacation up to the last 2 weeks of the year. And even though a lot of trading is done through algorithms, the trading desks are not going to be manned. Now, there's a crazy story that might come out this week, a big world event. Russia decides to invade the Ukraine Tuesday. You know, people go come back into that office and they're going to trade it because it's about making money at the end of the day. But if nothing abnormal to me happens, I would anticipate a very slow market, not a lot of volatility. But anything can happen because what we didn't expect this week was a lot of the selling that we saw. And we're going to kind of go into that when we look at the charts of the major ETFs that essentially track the indexes. But I wouldn't anticipate a lot of craziness because, like I said, most people are on vacation. They're going to be on vacation till the year's over, right? They're going to get this Christmas break. They're going to get New Year's, and they're going to come back into the office. And we see January normally in the market is normally a down. Because what a lot of people are doing is trying to kind of figure out what is going to be their 2021 year plan. And they start kind of reforecasting, even though people did a lot of tax losses these last 2 weeks, which I think you've seen a lot of selling. So what we're going to look at really quickly is S&P Index 500 seasonality. Looking at December, to me, we've seen a lot more volatility than normal forecasted from a seasonality standpoint. And I think it has a lot to do with where we're at right now in our economy. So, you know, we got to take into account the variance. We got to take into account the inflation rate. We got to take into account a lot of things that may have impacted our seasonality forecast where it didn't really match in line with what we thought was going to happen. And then you just have to understand how to manage it. So you always want to look at, when you're looking at an individual company, what are some of the macroeconomic things that can impact that on the sector level, on the industry level, and then on the management level of that individual company. And then ask yourself, is the share price being impacted by these 3 things altogether or just one individual thing? So, you know, is the overall macroeconomic situation good, but the industry is being impacted by something like car companies, car manufacturing companies, and a chip shortage. So even though the overall macroeconomic situation could be good, we could have a chip shortage that's impacting the car industry. Then how are the individual companies going to deal with chips? You understand me? And then how is each sector of that particular industry? So we look at the vehicle industry or what we call the automobile industry. Then you got particular sectors of that. So you got to take these things into impact. It's not necessarily always good to just pull one data point out of something and think that just because this one data point is going in this direction, then I can kind of make an analysis on that. And you can, and just, you know, I would track it and see how that works for you. So therefore, there's a lot of extenuating factors that are impacting our macroeconomic situation, which could kind of, to me, violate what we'll be looking at from a seasonal standpoint over the 20-year or maybe even a 10-year. And we just got to always take that into consideration. So what we're looking for this coming week is I'm just looking for a lot of sluggishness in the market. but anything can happen on Monday. The way this market's been trading, where it'll open green and turn red, or turn red and it'll open red and turn green by the end of the day, you never know. So we'll see. We still got this evergreen situation in China. Anything can happen over this weekend, and the next thing you know, we got to play it the way we got to play it when we go into the market on Monday. Now let's look at the actual earnings coming up. So we talked about before, earnings season pretty much is over, but we also still going into some decent earnings. So what I'm looking for is Nike. I may listen to that even though I don't trade Nike, just to try to figure out, are they going to have any more information on their supply chain issues. Also may look at Carnival. I may look at Rite Aid. I may look at, not looking at BlackBerry. That's a meme stock to me. CarMax, Cintas. I think a lot of people don't know how big Cintas is. Look at Paychex. And that's pretty much going to be it. And we see that Thursday and Friday is nothing really going on. We pretty much is at the end of earnings season, and we're getting ready to start a new one where everybody's going to report their fourth quarter earnings. But Nike will be interesting because we want to kind of understand, how are they going to deal with their supply chain issues? Do they have solutions to that? Because then we may get a preview of what their fourth quarter earnings are going to look like. Okay. Now, what we're looking at now is a U.S. economic calendar. Let's go to, let me get here. The 20th, 21st, really not nothing. Consumer confidence, existing home sales, I'm going to look at that. And then we got jobless claims coming out on Thursday. And on Friday, we got nothing going on. So like I said, unless something really, really crazy happens this week, I don't think there's going to be any super volatility in the market. But at the same time, I didn't think last week was going to go the way it went. Now, let's look at some of the ETFs, because I want to kind of show you this. So go into the 1 year. We're looking at the SPY. Let me zoom in. And what did we talk about last week? We just keep rejecting that 470, right? We just keep rejecting it. So we rejected it here. Sorry, we rejected it here. We rejected it here. We rejected it here. And rejected it here. So now what we really have now is a true line of resistance. Normally I say I call a resistance point at 3 points touching a line. To me, we got a true line of resistance now. Now, whatever we need to happen from a macroeconomic standpoint to push us past the 470 is what's going to have to happen. But for some reason, the market has been very hesitant to push the SPY over the 470 mark. Okay. And we just got to try to figure out what is it going to take to do it. So if you look at the 2 year on the weekly, you're going to see essentially the same thing. So these are the kind of questions you want to ask yourself. What is it going to take to get this SPY past this 470 mark? Right. Same thing if we're looking at the QQQ. Let's go to the Q, hit that chart, go to the 1 year. Right. Same thing. We talked about essentially the resistance was 400. So we did get above it here, and then but essentially sold back down. So we got it hitting 400 here. We got this here, open at 405, closing under 400. We got it rejecting here again. Same thing around here, and the same thing here. So what is it going to take for the market to get past this 400 mark on the QQQ, right? And so these are the kind of questions you want to ask yourself. So going into the new year, do we think that we're going into where the market is going to start taking a really bullish pattern or taking a bearish pattern, and people start pulling money out of maybe growth, maybe more into cyclicals and value-based stocks based on whatever macroeconomic situation is going on? It's just, it's just weird. We're pretty much out of December, but some people, their winter doesn't really start until January. But what we're finding out is that this variant at this moment is not showing that it's as dangerous to people as maybe the Delta or the original pandemic. Okay. So we may not get negative numbers from hospitalization and things of that nature that could be used to drive the market down. So then the question is, what scenario, what information you think is going to cause the market to be bullish or bearish? Just talking about Federal Reserve monetary policy, it's kind of like obvious now the market really doesn't care that much, right, about what this guy does. I think, like I said, they've been desensitized to it because they know at the end of the day, they still have to trade around it. So companies still have to increase shareholder value regardless of it. Money's going to move around the market. But I just think until this thing gets to maybe around 2% is where you might start seeing the shock in the market. But that's just my opinion. It doesn't mean it's going to go that way. So that's pretty much our market-based analysis. And now let's talk about the story of the day. Here's a really good story that I want to encourage you to spend some time this weekend on Bloomberg reading this story, right? And this story is about, I think the headline is kind of inflammatory. We kind of talked about that before. But this is a really good story about how McDonald's, what they started trying to do, and I forgot what year we talked about this. So let me tell you a really quick story about my experience with black ownership of McDonald's. So I'm from Orlando, Florida. There was a guy when I was in high school. He was a black guy. He owned a McDonald's by my high school, which is in the black area. He owned another McDonald's by this area called LB McLeod, which is primarily a black area. And then he owned another one, which used to be at the old Naval Training Center, which was not a black area, but it was a cash cow McDonald's. This guy was rich. I don't know if he was wealthy, but I know he was rich. And it was pretty much because of that Naval Center McDonald's. When you have a McDonald's on a Navy training base, it's impossible not to make money because why? You got essentially a captive audience. Got a bunch of young people that don't want to cook. They're not going to cook. And so they just go to your McDonald's all the time. So I knew his son, and I could tell that his son was raised with just nothing but money. Guy wasn't arrogant. He wasn't rude, but you could just tell like all he ever knew was having money because his dad had such successful businesses because he had three really successful McDonald's, but the one of the Naval Training Center was the most successful. Now they got rid of that and put like a residential area there. But like in the 90s, they had that Naval Training Center there that trained a lot of Navy recruits. And so that was a cash cow McDonald's. This is a really good story about how McDonald's was bringing in black franchisees, right? But one of the challenges that a lot of the black restaurant owners had is that McDonald's was only allowing them to get McDonald's in black areas. And even after they had proven success in these areas, they were not allowed to buy in suburban, more wider areas. Now, people say, well, why is this an issue? When you're running a franchise like McDonald's, you're really playing a game of margins, right? And your margins can be very small, but there's a lot of volume behind it. So really, you're playing the game of pennies. And one of the things they talked about is that a lot of these McDonald's in these lower income areas, when you go to buy it, you find out that it needed remodeling. All the equipment isn't working. You have a lot of issues just to get it to a baseline off the ground. And then because of the area, the revenues may not be the same as in a nicer area. So essentially, it takes more money to get it off the ground, but it also takes a lot more money to make it successful. And a lot of these guys have figured out how to make these McDonald's successful. So here's his brother right here. He owned a lot of McDonald's. And it's a really, really good article about this. However, their issues was that after they had shown the McDonald's Corporation that we can take these struggling stores in these black areas and make them successful, now we want to buy into more affluent areas, which happen to be white. They felt like they were getting blocked out. And so essentially what they did was they sued the McDonald's Corporation. And they were able to get some rules set. But then I think now they're thinking about maybe going back to court to try to get some more legislation. And this is a really, really good article for people that really want to kind of understand business and the challenges that real business owners have, especially when you're dealing with a storefront business. You know, we own this internet space, and a lot of times everybody has internet businesses, and I don't think they really get what it takes to run a storefront business with HR impact, things of that nature. Some of the stories these guys talked about is that, you know, you're in such a high crime area that you got to hire a armored car to come pick your money up because you can't take your deposit to the bank because they'll rob you. So you had one guy was paying $10,000 to an armored car service to come pick up his money. So that means that he got to be making enough money to pay the armored car service 10 grand. See, so that puts another cost with your business. So I kind of think in this internet world where, everybody has an online business. So, people that make YouTube videos for a living, they don't understand the actual responsibility that a storefront person has. It has a staff. He got people he got to pay. He got to make payroll every 2 weeks. He got to pay fees associated to his parent company. So for these guys to become successful in these environments, it really speaks to their ability to be successful business people. This kind of people that we need to give a lot more attention to and kind of understand their issues. So this is a really, really good article on Bloomberg. I would tell you to read it and kind of understand it. And I don't necessarily see it from a racial standpoint. What is it? Just an issue of access. And what you have with these black business owners, they're saying that, okay, we've been successful, essentially behind the 8 ball, right? We were put behind the 8 ball and we figured out how to be successful. Now we want to get more access to where we're not always behind the 8 ball. because their attitude was that if I'm a white franchisee, I don't get pushed into these black areas in which, like I said, a lot of the stores are not up to, I wouldn't say up to code, but they're not up to speed as far as with new equipment. The areas around the particular areas, they're not driving in a lot of revenue. And these guys, through the sweat of their brow and just through hard work, figure out how to make this thing successful. Now I want to try to get a scenario that's a little bit easier for me, and I can't. Another thing he got talked about was the fact that, every time you want to buy a new franchisee, McDonald's has to agree to it. He felt like he was being blocked out of buying enough McDonald's. And his attitude is, I want to use McDonald's to build wealth for my family. So I want to start giving McDonald's to my son and let my son run them. He felt like McDonald's was blocking him out. And one of the things that we've bought into as black people, now we're going to talk about race. One of the things that I think that we bought into is that we've kind of conditioned ourselves that we always got to have the against all odds story. Like all our stories got to be, well, even though this happened, I still overcame it. Well, even though this happened, I still overcame it. We always got to, that story works a lot on the internet. A lot of online marketers got a good rags to riches story. There's nothing wrong with that. But the question is, when do we get a point to where I was able to create something to where my children didn't have to go through that? And that's what a lot of these guys are talking about. Was like, we did everything from behind the 8 ball. Now we want to create a scenario where our children don't have to go through everything we went through to also be successful. And we feel like we're not being allowed that opportunity, even though we show this parent company that we have a track record of success in this particular area, that we're good franchisees, we're good franchise owners, and we're value to this particular organization. So I think this is a really, really good article for people to read that want to really understand business. And this is one of the reasons why I tell people to read articles like Bloomberg, because the conversation is a little bit different than what you get through like mainstream media that's talking about things like critical race theory, which has no economic impact at all in any scenario. Everybody could do critical race theory, would have no economic impact. Nobody could do critical race theory, will have no economic impact. These type of business people that are involved in making these lower income areas better places to live because they're bringing successful businesses to them, their success or failure will have an economic impact to the area. And these are the kind of stories to me that we need to focus more on. So I want to encourage everybody to read it, to go into this particular article. If you're in my course, you know how to access these particular publications through the course. If you have any questions, reach out to me. We're still having our Black Friday sale. The code for the sale is Black Friday, BLK Friday. The website is www.highestpaid.online. It should be in the description. Want to tell you that sale will be over top of the year. So you don't have to wait till next week. I would tell you to go ahead and buy right now today and beat yourself to the punch. If you have any questions, it's David W. Williams. Talk to you later.